Hello everyone, my name is Alexander Mastalish, and I'm a junior part of the Applied Investment Management program here at Marquette University. Today I will be pitching/presenting to you West Fraser Timber Co. Limited, ticker WFG, which had a final trading price of $90.70 as of 3/22/2022, with an estimated price target of $116.44. To provide a brief company overview, I will be covering the background, segment revenue, and geographical revenue of West Fraser Timber. West Fraser was founded in 1955 and it's headquartered in Vancouver, Canada. It's one of the leading wood producers in North America. It operates in 4 segments: lumber, North American engineered wood products, European engineered wood products, and pulp and paper, and has geographical revenue and sales in the United States, Canada, various parts of Europe and Asia, and China. And now to the recommendation. West Fraser is coming off of a record year, both in regards to earnings and revenues, spurred on by record high lumber prices and high housing demand and housing shortage. But West Fraser is not stopping there, and they are carrying this momentum into the future through investments into their shareholders, through stock buybacks, stock repurchases, and increasing the annual dividend, as well as investment into the future of the company through strategic investments into operation, as well as key acquisitions to expand operations. The company is very balance sheet strong, which allows them to manage risk prudently and weather fluctuations in lumber prices, as this is a very risky industry. The company is ESG focused, and overall, bottom line, the company is well run, balance sheet strong, and undervalued. Moving on to the first driver, key acquisitions. I'll provide a little background before giving you the benefits. So a little background is West Fraser acquired Angelina Sawmill in southeastern Texas at the end of Q4 2021, as well as acquired Georgia Pacific's OSB Oriented Standard Board Mill in South Carolina at the end of Q4 as well. This matches up with management's desire to look forward thinking and capitalize on the massive growth that they received in 2020 and 2021, and it is also their continued pursuit of expanding into the United States. The benefits of these acquisitions is it will expand capacity by 305 million board feet for the lumber segment, as well as 760 million board square feet for the North America engineered wood products segment. This allows West Fraser to meet customer demand at a low cost and will provide a projected 5% CAGR over the next 5-year period of increased capacity in unit revenue. Moving on to the second driver, strategic investment into current operations. For a little bit of background, West Fraser has made strategic investments into the expansion of the Dudley Mill and a reinvestment into the Brownfield Mill. The benefits of these investments are a decrease of waste per ton by 20%, a decrease of total cash cost by 20%, and an overall improved productivity by 50% for the lumber segment. This all results in a potential operating margin growth of 4.4% annually over the next 5-year period, forecasted in taking in mind of decreasing revenue and increasing cost of materials. This growth hedges against those falls and rising costs. Moving on to the third and final driver of my investment thesis, management foresight. For a little background, as aforementioned, management has been capitalizing off of record gains, pushing towards a better future for West Fraser. Management also had the foresight and understanding of the possibility of interest rates rising from the historic low rates seen in the period before. They've positioned West Fraser well for the future. The bottom line is, management foresight has positioned West Fraser to be in a better position in the less than desired market conditions of high interest rates, low housing demand, and has the company well positioned and ready to capitalize on desired market conditions when less than desired conditions subside. Moving on to the valuation. A 5-year DCF was conducted using a terminal growth rate of 1.25% and a WACC of 12.83%. A sensitivity analysis is shown in the bottom right corner and was conducted using 50 basis points. Relative valuations were conducted using EV to EBITDA multiples and PE ratio multiples of a well-selected peer comp group. Overall, combining using a 5-year DCF of 70% weighting and a relative valuation at 30% weighting, a price target of 116.44 was reached, having 28.38% upside from last trading price. Moving on now to risks. Risk number 1 is commodity fluctuations. Pricing of products are highly correlated with the current market pricing and demand of commodities, in this case, lumber. The top and bottom line of West Fraser are affected by the fluctuations of lumber pricing. The second risk is the availability of raw material, which can fluctuate given different governmental policies in the regions that they harvest wood, and natural disasters in those areas, which can affect the overall supply of raw materials for the company. Finally, most of the Canadian operations of the firm sell most of their products at U.S. pricing. This brings into effect currency rate exchange rates and the possible fluctuation and risk that poses. Moving on to management. The management team, as listed on board, has a couple key players on their management team that I'd like to highlight. Raymond W. Ferris is the current president and CEO, but has been with the company for a long tenure and carries different executive positions that have allowed him to have a wealth of knowledge and possess great management foresight and leadership. Current CFO is Christopher Andrew Versek, and the current chairman of the board is Henry Holman Ketchum, who has 37 years of experience on the executive board and is one of the sons of the co-founding partners. I'd like to briefly touch on ESG, as for the company is very impressive. There's a clear commitment to sustainability that management projects to keep moving forward. They carry an A rating according to MSCI and have a 5% CAGR over the past 5-year period reforestation program to keep reusing and replanting and moving forward sustainably. The bottom line is, West Fraser is a well-run, balance sheet strong, undervalued company that has great management foresight and is making and capitalizing off of record years to invest into the future of the company in good conditions and in bad conditions. Questions? Let's get this discussion going. There are multiple avenues and ways that you can reach out and provide feedback, thoughts, and ask questions. I look forward to hearing from you all, and thank you for your time.